Welcome to our Crypto News in 10, a daily podcast bringing you the latest news about crypto in under 10 minutes. It's Friday, May 15th, and here's what's moving crypto. A Korean megabank buys into the country's top exchange, a major market maker secures a MiCA license in Luxembourg, an Ethereum-leaning public company posts a softer quarter, THORChain scrambles to contain a fresh exploit, and Bithumb's first quarter numbers tumble amid lighter trading. Let's get into it. Story 1. South Korea's Hana Bank is writing a very large check for crypto. It's buying a 6.55% stake in Dunamu, the parent of Upbit, for roughly 1.003 trillion won, about $670 million. Filings point to around 2.284 million shares, which would make Hana the fourth largest shareholder when the deal closes in June. Local outlets call it the largest single digital asset investment by a Korean commercial bank to date, a sign that mainstream finance in Seoul is stepping into equity ownership of crypto infrastructure, not just custody pilots. Coverage from Forbes, Market Screener citing Reuters, and KBS World says Kakao Investment is the seller. The stake is big enough to be strategic, small enough to pass antitrust muster, and a clear signal to competitors why it matters. Upbit dominates Korean spot volumes, and banks have been tightening ties to exchanges through real name accounts and compliance rails. Equity ownership by Hana could speed up integrations, on and off ramps, payments, even tokenized securities distribution, while raising the bar on governance and risk. And it lands as regulators push exchanges for stronger controls after recent missteps across the sector. Story 2. In Europe, B2C2 just won a MiCA crypto asset service provider license from Luxembourg's CSSF. The authorization lets the SBI-owned market maker passport OTC crypto services across the EU under one harmonized framework. With MiCA's transitional period winding down toward a July 1st, 2026 end date, Luxembourg is becoming a favored hub. Firms approved there can serve clients across all 27 member states without a patchwork of national approvals. It's a big operational win for liquidity provision, especially for European banks that want a regulated counterparty for block trades and RFQ flow. Zooming out, Luxembourg has fast-tracked several CASP approvals this spring, and the window to file is closing fast. Expect more last-minute authorizations and some consolidation, as firms rush to meet that July 1st cliff. If you're an EU-based treasury desk, the practical takeaway is simpler vendor selection and clearer compliance. Story 3. Bit Digital, the Nasdaq-listed firm pivoting from Bitcoin mining toward an Ethereum-centric strategy, reported first-quarter revenue of $27.9 million, down about 13.6% from Q4, mainly on weaker ETH staking and cloud services. Management also disclosed a net loss of roughly $146.7 million, driven mostly by non-cash mark-to-market swings on digital assets. As of March 31st, the company held about 155,444 ETH at an average acquisition price near $3,045. It has been reducing exposure to Bitcoin mining and leaning further into an ETH treasury and staking. That's the crux of the story. More ETH on the balance sheet, more staking yield, but greater near-term P&L sensitivity to ETH prices. The market read: coverage frames it as a top-line dip tied to lower staking rewards, with Bit Digital signaling that Ethereum-focused operations and AI or high-performance computing adjacency via its white fiber stake are now central to strategy. If you track public ETH treasuries, add this one to your comps. Before we continue, here's a message from our sponsors.
Need elite developers fast? Elite Coders connects you with rigorously vetted senior engineers in 24 to 48 hours. Staff augmentation, dedicated teams, or full project delivery, we've got you covered. Visit elitecoders.co to get started today.
All right, let's get back to it. Story 4. THORChain hit the brakes this morning after on-chain researchers flagged a suspected multi-chain exploit spanning Bitcoin, Ethereum, BNB chain, and Base. Early loss estimates crossed $10 million, prompting the protocol to pause trading while teams assess vault activity and trace funds. Rune, THORChain's native token, slid double digits on the headlines. If confirmed, it's another reminder that cross-chain infrastructure is both high value and high risk. Here's the practical lens. When attackers can hop liquidity across multiple chains quickly, incident response windows shrink. Community notes suggest the pattern echoes prior fake deposit style vectors. Details are still developing, but the governance and ops test is the same. How fast can responders isolate vaults, coordinate with exchanges, and push cleanup patches without amplifying risk? We'll be watching for the post-mortem and for any user remediation plans. Story 5. Over in Seoul, Bithumb's first quarter revenue fell 57.6% year-on-year to 82.5 billion won, about $61 million, with operating profit plunging 95.8% to just 2.9 billion won. The company disclosed the results on May 15th, and local business press tied the slump to thinner retail volumes and tougher competition versus Upbit. It's a stark contrast to the go-go days of Korean retail trading, and it lands as regulators scrutinize exchange controls more tightly. For market structure watchers, the Korean leaderboard looks increasingly barbelled, one dominant venue and rivals under earnings pressure. Quick recap. Hana Bank's $670 million Dunamu buy-in spotlights banks taking equity stakes in crypto market infrastructure. B2C2's Luxembourg MiCA license shows the EU's passporting machine is spinning up ahead of the July 1st deadline. Bit Digital's ETH tilt comes with softer near-term revenue and mark-to-market choppiness. THORChain's suspected $10 million exploit is another caution flag for cross-chain risk. And Bithumb's Q1 slump underscores how concentrated Korean spot trading has become. More tomorrow. Stay safe out there and keep your keys secure. Thanks for listening, and see you tomorrow.